Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So I hope everyone's having a great time out there as book week continues to roll right along. Today, I have a great installment for everybody. We're going to go over the greatest trade ever about John Paulson. So first couple of days, we covered reminiscence of a stock operator, the life of Jesse Livermore. Well, it's kind of a fictionalized life of Jesse Livermore, one of the greatest stock traders of all time. Then we went to Donald Trump with covered the art of the deal. So we looked at, life of a real estate developer, basically. And today we're back to the stock market. We're back to kind of a trading again topic, but we're looking at this time from the perspective of a hedge fund manager and more modern day Wall Street. We're going back to 06, 07, 08. And I'm going to bring this up right here. So this is the book, The Greatest Trade Ever, the behind-the-scenes story of how John Paulson defied Wall Street and made financial history. And this book was written by Gregory Zuckerman, which we'll get into here in just a second. So, The Greatest Trade Ever, author Gregory Zuckerman. This was written in 2009. The publisher is Crown Publishing Group, a division of Random House. The book is approximately 293 pages, and it is the behind-the-scenes story of how John Paulson defied Wall Street and made financial history. So, who is John Paulson? So, this is a nonfiction account of John Paulson's $15 billion subprime mortgage bet during the 2006 and 2007 or 2007 to 2009 financial crisis. So this chronicles Paulson's journey from a mediocre hedge fund manager to a financial legend, using credit default swaps, CDS, to short the housing market. So the book explores the subprime crisis, Wall Street's blindness, and the underdog investors who profited. So this, you could think of this as like an add-on to if you've ever seen the movie or read the book, The Big Short. You could also look at it at the HBO movie, Too Big to Fail, I think would fall with the book by Andrew Ross Sorkin of the same name. I think both of those would fall right in nicely with this book. Obviously, they're probably never going to make a movie about this because even as incredible as it is, again, The Big Short, and Too Big to Fail kind of pretty much covered this from both ends in a lot of respects. But also, I don't think the American public's going to be super excited to see the hedge fund millionaire become the hedge fund billionaire. And so his firm made $15 million in profits in 2007 from their bets against, the mortgage market. He personally made $4 billion just in 2007. That's why it is the greatest trade ever. It's the largest single amount anyone has ever made from a trade in the history of modern finance. Okay, but let's continue on here. So John Paulson, he has this company called Paulson and Company Inc., which we'll see was a very kind of middling, small little tiny hedge fund on Wall Street that basically was like nobody really knew or cared about. But let's go back into his background for just a second. So Paulson was born in 1955. Paulson was a mergers and acquisitions specialist with no real estate expertise, and basically he's running this small hedge fund, Paulson and Company. The hedge fund only had, I think, maybe like 100 million, 200 million, something like that in assets at the time. I mean, so nothing really to by Wall Street standards. I mean, nothing really to brag about, so to speak. I mean, everybody, if you'd have walked into some big player's office and said, "Oh, hey, I'm John Paulson. I'm from Paulson and Company," they would probably look at him and be like, "Who?" So just to give you an idea here of kind of where he was at in 2006. So his firm was described as reserved, practical, and also ran on Wall Street. And he struggled to raise funds and faced skepticism from his peers. In 2006, analyst Paolo Pellegrini's chart showing housing price divergence sparked Paulson's conviction in a market crash. So in the book, so Paolo Pellegrini is a brilliant guy who basically worked for him as an analyst, and he would send or give Paolo all these tasks where he would say, okay, try to find me spots, like find me either stocks or find me find me things in the market that I can use to trade to basically, to make money, what hedge funds do. And Paolo came back and said, hey, listen, I've been looking at all these numbers, and the housing market's gonna crash. Like the housing market's gonna implode at some point. But their big thing was they couldn't figure out how to trade it. That was the thing that they both grappled with for probably about almost a year. They couldn't figure out how to trade this thing, and then finally they came up with the credit default swap. And I thought this was a nice little not like a chart, but like a graph here. So credit default swaps are a form of insurance that investors seek when they are worried about a company's ability to pay off a bond. So in other words, ABC company issues the bond to 123, and then 123 firm buys a bond from ABC. But then 456 Bank, they're going to insure the bond for 123 firm and agrees to pay it if the value of the bond basically agrees to pay the value of the bond if ABC defaults. In return, 456 Bank gets a fee, usually as a percentage of the value of the bond from 123 firm. Now, part of the problem that Paulson faced, and they touch on this a little bit in the movie The Big Short, but I think Paulson faced it more so than those guys, is that basically a lot of the banks that were holding the credit default swaps couldn't pay him. They were on the verge of all going bust, and it was like. And again, they a couple of the characters in The Big Short, they faced the same kind of situation where it took them, what was it, Michael Burry? He struggled with trying to get paid out. At first, they basically refused to pay him. They were like, we're not gonna pay you. So even though you made you had the foresight, and you made the right bet, and you found the vehicle for making the bet, there still was not necessarily a guarantee that you were going to get paid. You were going to get paid out on the bet. But anyway, so the subprime bet. So Paulson launched the Paulson Credit Opportunity Fund in 2006 using CDS to bet against subprime mortgage-backed securities. He faced losses as housing prices rose, but doubled down, investing heavily despite mockery from banks and investors. Now, again, if you go back to The Big Short, you saw the same thing in the movie, where they're just betting. Michael Burry is he's doubling down. He's got investors. They're all freaking out, and then obviously the other team. I can't think of all their names off the top of my head, but the other team, which is betting against it. Like basically they're trying to in other words, things are going south, but the markets, the numbers that are getting reported to the market are still upbeat and positive, saying everything's normal. So therefore, he's faced with the decision of, do you double down? Do you double down and keep going, or do you throw the towel in and basically accept the losses for, on the premiums and the fees on all the CDOs that you already bought? And then his team, including Pellegrini, meticulously analyzed mortgage data, uncovering Wall Street's overconfidence. So the payoff. So in 2007, the subprime market collapses, earning Paulson's firm $15 billion, with Paulson personally netting $4 billion. Outperformed George Soros's 1992 pound trade, with gains continuing into 2008. Now, obviously, if people don't know, George Soros's bet against the pound in 1992, it was one of the greatest trades ever made in terms of the profit that he made off the trade. You could talk about the morals of that all day long. That's an interesting trade. I should probably do an episode just on that trade, because I think people would find that very interesting. Other investors like Jeffrey Green and Michael Burry also profited, but poor timing ruined some, highlighting the importance of execution. So again, it gets back to not only the trade, but the execution itself. So strengths of the book. So gripping narrative, Zuckerman's blow-by-blow storytelling reads like a thriller, making complex finance accessible. Insider access, so based on 50-plus hours of interviews with Paulson, offering unparalleled detail. Humanized characters. So portrays Paulson, Pellegrini, and others as underdogs, making readers root for them. Weaknesses of the book, limited character depth. So Paulson's personal life feels flat, lacking the vibrancy of Michael Lewis's book, The Big Short. Minor bloat, some biographical details don't advance the plot. And then ethical questions unexplored. The abacus, for example, Goldman Sachs scandal is only briefly addressed in later editions of the book. And I just want to make sure I wasn't missing. Themes and relevance. So basically exposes Wall Street's hubris and the opacity of financial instruments, relevant to ongoing debates about regulation and crypto. Celebrates contrarian thinking, showing how outsiders can outsmart insiders, but raises moral questions about profiting from crises, especially post-abacus controversy. Abacus, that's to talk about that, and that's another episode in itself. So what's the conclusion and recommendation here? So the book is a masterful, fast-paced account of Paulson's historic bet, blending finance and drama. Ideal for readers fascinated by markets, crises, or underdog stories, less suited for those seeking deep personal narratives. Read it for its insights into the 2008 crisis alongside The Big Short and Too Big to Fail for a broader perspective. So yes, I give this book an A+, 4.5 out of 5 stars. It was a great read. It's a fun read. It really does give you an insider's look of what's going on on Wall Street in terms of managing a hedge fund, or how a hedge fund manager might think about certain trades, and then not only placing the trade but executing the trade, also getting your money. And it is a very contrarian. It's a contrarian underdog story. This guy who basically against all odds, he made this bet. He's the laughing stock. Nobody believed him, but he believed in the data. He believed in the research. He believed in the homework that they did, that they had made the right bet. And boy, was he ever right. Now, of course, we could spend a lot of time talking about the ethics of such a trade, but and that gets very tough, because somebody's going to make this trade, right? Somebody's going to make it. It's Wall Street. It's what you do. You bet. You bet long. You bet short. You bet different ways for different reasons. You see things. You go with it. Sometimes it's based on a lot of research. Sometimes it's a gut feeling. But somebody was going to make that bet, and somebody profited off him. He did. A bunch of other people did. But at the same time, I think at the end of the movie of The Big Short, Brad Pitt has this moment where he basically says, don't celebrate, don't celebrate, because with you guys making that money, that means somebody else lost their house, somebody else lost their job, somebody else lost their livelihood. And I think that and you can't ever forget that. You can't ever forget that there's another part of the trade, right? There's a zero-sum game. There's somebody's winning and somebody's losing. And therein lies, again, your kind of moral debate or ethical dilemmas, so to speak, about placing bets such as this. But again, fantastic read, very interesting. I would highly recommend, if you read this with Too Big to Fail, The Big Short. I think if you read all three of these books together, you'll get a very well-rounded view of everything that was going on there in terms of the traders, what was happening on Wall Street, the internal dynamics, the regulators, all the different things that were going on at one time. So, but yeah, like I said, I hope you liked. I hope you liked this review of The Greatest Trade Ever about John Paulson, and I hope you find it interesting. Maybe go check out the book when you have a chance. And I will be back for a couple more book reviews to end the week here. But until then, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that really helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, please check out some of the other content on the channel. I thank you for listening. Have a great day out there, and I'll see you again real soon. Thanks a lot.